Thanks for coming back here to the Hunter of Dividends YouTube channel. We're talking discounted dividend stocks for May 2022. My top three names that are discounted based on the recent market dip. Thanks to everybody for tuning back in. I hope everybody's having a good week thus far. Hope you've been able to buy some future income with the stock market giving us a sale. I don't know when this is going to be at the bottom. It could be a long ways to go. We could turn around again before long, but I like to get some discounts on these quality names. I don't try to catch the bottom. I just dollar cost average in, let patience and time and compounding do its work here with these dividend stocks. So let's take a look at my top three discounted dividend stocks for May 2022. First, all the major stock market indices have dipped at least 12% from their high set just a few weeks ago or in recent months, at least, depending on the average. Let's take a look at three dividend stocks that I believe are discounted right now, and you should at least consider buying them. Number one, T. Rowe Price, ticker symbol TROW. I know I talked about this one a few weeks ago, but I have to continue to buy this one as it drops. T. Rowe Price has zero debt, no debt at all. This stock has a 3.83% dividend yield. Simply Safe Dividends gives it a 94, very safe safety score. Obviously, it's a lot easier to have a safe dividend score without debt and the cash flow going through. Even with asset managers really in a rough patch, it's not a great environment for them right now, I will say that. But this one has gotten too cheap, in my opinion. 36% payout ratio with no debt. The yield on cost here should be great long term, very good. This company trades at a PE ratio of about 11. Let's take a look at T. Rowe Price's chart. The 1 year, just a horrible, really ugly drop here in the last 6 or 7 months, down 40-some percent, almost 50% from its high. Brutal run here for T. Rowe Price, certainly. I think this one's really gotten a little bit too far down. If you look at T. Rowe Price, the analysis, the estimates for T. Rowe Price, they've gone down a bit, but they're still over $11 a share. T. Rowe Price has done a really good job in the long term, management-wise. The Simply Safe Dividends look here, 94, very safe score. Beta is 1.33, so this one is a little bit more volatile than a lot of the others. 5-year CAGR, 15%. Really impressive dividend growth. I think that will continue 35 years straight. I don't see it stopping. I think this is a stock that's too cheap at this point. You look at the dividend yield now compared to what it has been. You look at the forward PE ratio compared to what it has been. This one, timeliness, Simply Safe Dividends says it may be undervalued. I believe this one is undervalued. I really like T. Rowe Price quite a bit. Look at the earnings per share as they have risen very nicely. We hit a soft patch here. Everybody knows that. I think when these earnings do come in lower than the previous year, it's already baked into the stock at this point. The sales growth is still there as well. Return on equity has been very solid. Operating margin just massive, 44, 49%. I think T. Rowe Price is too low at this point. So they're number one for my discounted dividend stocks for May 2022. Number two, Air Products and Chemicals, ticker symbol APD. This is a new one. I haven't talked about it here on the channel yet. 2.75% dividend yield, Simply Safe dividend score of 95, which makes it worth paying attention to, certainly. Payout ratio, 64% is a bit higher than I'd like to see. This is a recent add of mine. I don't have many shares of APD yet. If it does keep dropping, I will add more. Sales growth has accelerated very nicely for APD, 17 and 22% the last 2 years. Operating margins in the 23 or 24% range, very good for this industry. Interest coverage of 17.16, so debt is not an issue here for this one. You can see the chart here for it. 1 month, it's dipped quite a bit. 6 months, we had a big drop and then a little recovery, and now it's dipped back again. This one is down from $316 at its 52-week high, so it is down quite a bit here. I think this is one to keep an eye on as we go forward. I'm not saying this one is like way undervalued at this point, but I think the dip gives us an opportunity to at least get it at a reasonable valuation. 11% CAGR on the dividend growth. I don't know if they can keep growing that quickly because of the payout ratio is a little higher than I'd like to see. Like I said, the earnings per share have been consistently growing nicely. This is a stock where management appears to be doing a good job. It's dipped quite a bit with the overall market. You look at the net debt to EBITDA. This is really impressive to have it down around 0.87 here. Very good, and like I said, the interest coverage is solid here as well. I think APD is one to keep on your radar as we go forward. The third one, discounted dividend stocks from May 2022, Main Street Capital Corporation. This is ticker symbol MAIN. This is a stock I've been adding to quite a bit here in recent days. Private equity firm specializing in equity capital to lower middle market companies. The current yield, a whopping 6.58%. I mean, that is really impressive. And most stocks that are yielding 6.58% do not get a good Simply Safe Dividends safety score. 62 for this one, which is a pretty solid. Interest coverage of 4.1, solid for this type of company. This is a monthly dividend payer. Keep that in mind. Those monthly dividend payouts sure do feel great. They kind of hit different. So I think ticker symbol MAIN is another one to keep an eye on. This one went ex-dividend here today. That's part of the reason it dipped so much today. And I do an ex-dividend calendar every week on Twitter, at Hunt Dividends on Twitter. You can follow me there. I'll be continuing to post those as well. But I think that Main Street Capital, it's a pretty quick drop here as well. They were up at 44 just a couple weeks ago, and now they're down to 39. That dividend yield is enough that I'm certainly paying attention. And as I said, the Simply Safe dividend score, safety score 62. I don't think we'll see massive growth in the dividend, 3% CAGR in the last 5 years, probably something like that continues, maybe 2 or 3%. But you're already at a yield of 6.58%, so we can't get too greedy. I do want to mention too, before I close, other stocks that I've been adding to here in the last week or so that I've covered on videos in recent days. Starbucks, I've been adding a lot to it here in recent days. Lowe's, Verizon. I mean, Verizon is really getting beat down. It's not a popular name. I know it's out of favor for sure, but that dividend yield is impressive and really big business that, they won't be going anywhere anytime soon. So I think that one's gotten a little bit too low. And Starbucks, the growth is still there. It hasn't been this cheap for a long time. Lowe's, housing is a bit of a question mark, and I understand that's why it's come down. I do think the housing market has been way overheated, but Lowe's is a great name, and I think they'll do well going forward. These are long-term buys for me. This is not me saying that I think these stocks will do great in the month of May. I think that these are good long-term buys at their current level. I believe they are discounted in the stock market right now. So drop a note below in the comments. What stocks do you think dividend payers that are undervalued right now, discounted in the stock market? What do you think of these three names? Do you like them? Don't like them? Why not? Appreciate everybody tuning in here lately. Seeing the growth and see the views bumping up certainly encourages me. Give this a thumbs up. I appreciate it. Subscribe to this channel. As I said, at Hunt Dividends on Twitter. And let's continue building up these dividend stocks and getting that future income. Everybody have a great rest of your week.